In today's video, we're going to be talking about a pi cycle top indicator update, because whenever we see a crossover in these two green-orange moving averages, we tend to see a bull market peak occur with quite good accuracy. So let's talk about this upcoming bearish crossover and generally a pi cycle top update in general. Let's dive right into it. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's dive right into it. So we know that these two moving averages, when they cross over, that's bearish, that precedes a bull market peak and top. But what's also interesting about these two moving averages is that they can be dynamic resistances and support. So this green average here, moving average, is going to act as a resistance, and it is doing so for the time being, just like it did back here, as you can see in the 2021 cycle before it broke out to new highs. In 2019, we also saw rejection from this green moving average, and we saw rejections here across the 2017 cycle as well, not to mention 2013, perfect rejection or even overextension before rejection, and a rejection here as well. But generally speaking, that's the resistance that is the green moving average. Throughout a halving cycle, in the halving year, this orange moving average also acts as a support, as we can see in 2017. 2019, not so much, although in 2020, which is the halving year, that's when this orange moving average tends to act as a great support. In the bear market and halving years, the bear market and pre-halving years, apologies, we don't really see good support at this orange region. But once again, you can see here, fantastic support at the orange moving average in the halving year. So really important to bear in mind that these are going to be the dynamic resistances and support here. And the green moving average here is approximately 80k right now. So we did see an overextension beyond this resistance in March, and this was 70k. So we've seen an increase in this moving average by $10,000 to $80,000. So we are seeing inclining there, but we're also seeing inclining on the orange moving average, which is now representing the price point of 58k. And what's interesting about that, before we talk about this chart, in fact, what's interesting about that is that we have perfected a support retest at this orange region. And we did that earlier this year as well, and even in late 2023. And every single time that we did rebound from this orange moving average, that was essentially the bottom. So according to this pi cycle moving average, this is the bottom for Bitcoin. And it's this pi cycle moving average that is going to enable this sideways range that we're seeing. And it's been 2 months that we're in a sideways range. We saw downside deviation below this level. Check out the recent video about this reaccumulation range that I talk about, because it really is a compelling idea. We always see reaccumulation phases around the halving event. And what's interesting about that is that we're also seeing a reaccumulation range below the old all-time high, which is another confluent factor, because we always see old all-time high reaccumulation, whether it's a shorter reaccumulation like we saw here in 2020, whether it was a more zigzag, longer reaccumulation like in 2017. In 2013, we just blasted beyond this point of old all-time highs, which is this black level here. So the fact that we're seeing a reaccumulation range around old all-time highs is essentially being quite faithful and truthful to historical cycles. And it's confluent with the fact that we always see reaccumulation prior to the halving event. And if you look at, for example, previous halvings, for example, May 2020, you see reaccumulation going into the halving event. July 2016 as well. If you look at this period, it's more or less around here. We have that pre-halving retrace and then consolidation, reaccumulation afterwards. So reaccumulation around the halving event tends to occur. Reaccumulation around the old all-time highs tend to occur. And it just so happens that in this cycle, we have reaccumulation around the halving event and reaccumulation around the old all-time high all into one, occurring at the same exact time. Isn't that fantastic? Isn't that interesting that we're seeing that sort of confluence occur? So this orange region, if we're lucky, it gets tapped again, but historically we don't really see revisits of this orange region, unless we get something like in 2020 where we rebounded from there, went towards the upside, and then rebounded again, and notice that this was actually around the halving event, so a reaccumulation phase. If we were to see consistent sideways moving right over here in the coming weeks, then maybe we do get to touch that orange level again, but it wouldn't be at 58k, it would be at a higher price point, maybe 60k, 61k, because this is an inclining moving average over time. But 2020 shows us that, okay, maybe a double bottom occurs at this orange moving average. 2017 has shown us that it can actually rest at here at this level for a long time. Will we get that in this cycle as well? Throughout the past several months, really, we've had 3 retests but no double bottom, and counting on a double bottom, we'd be lucky for it to occur. Generally, I think this is a range here, so maybe we do tap the range low at some point in the future. Would we see this moving average become a confluent level of support with the range low? That would make total sense, and that would be confluence in that support, and that would imply strength for us not going lower than that 6,600, so $60,600 for Bitcoin in the future. That's the range low essentially for Bitcoin. But let's talk about briefly, where could we extrapolate these 2 moving averages in the future? And if we do extrapolate these moving averages, then at this point in time, we'd get a February 2025 bull market peak. And this changes a lot. And you can actually see, if we zoom in here, it's not picture perfect aligned for an extrapolation, because these 2 moving averages, they change a lot. They flick up, they flick down with small fluctuations in price. So February 2025 as a potential bull market peak, this is going to change. If we flick towards the downside, that's going to be pushed into the future. If we flick towards the upside, that's going to occur a little bit earlier. So really important to take this with a pinch of salt, but just for an exercise, a intellectual exercise here. If a February 2025 bull market peak is to occur because of this bearish crossover in the pi cycle top indicator, that is a little bit sooner than what the traditional halving cycle suggests, because the traditional halving cycle suggests that we will see a bull market top in mid-September 2025, and so that's 210 days away approximately, and that is assuming that we have an accelerated cycle by 210 days. And what's interesting about that is that in mid-March 2024, we saw a new all-time high get formed, which essentially solidified to us that Bitcoin is currently in a accelerated cycle by 260 days. But because we've been moving sideways for the past 2 months or so, that now cuts that 260-day rate of acceleration to 210 days, which is quite interesting because we're getting 210 days ahead of schedule relative to the halving cycle. So very interesting to see that also appear right over here. This rate of acceleration will continue to decrease from 210 to 200 to 190 to 180 the longer we simply move sideways in this current range. So what's interesting about that is that it also ties in the current bearish crossover right over here for mid-February, ties in with generally if we use the old all-time high as a reference point for price in measuring a bull market peak. So if we measure a break beyond the old all-time high here, and then we peak at this new all-time high here, it took 266 days for price to rally from here to here. So essentially breaking old all-time highs and rallying to new all-time highs. But this occurred a little bit later in the future at 280 days in this cycle. And if we measure this here, then that extended again 315 days from breaking old all-time high to rallying to new all-time high and peaking ultimately there. So we are seeing some sort of lengthening in the bull market peaks. So if we continue to lengthen this by maybe a month or so, then that gets us to 350 days beyond old all-time highs, and I mean we've broken to new all-time highs in the cycle again, so we're measuring it from here. But if you really want to change that, you can start measuring it from the moment we actually break convincingly beyond new all-time highs. So there is a way to measure it, and I've been measuring it from the first break beyond into new all-time highs, because if you measure it from convincing break to new all-time highs, we have even less time, and maybe that's something I can share in the next video, in a future one. But this 350-day period measured from the first time we break to new all-time highs, that is quite confluent with a March 2025 bull market peak and this pi cycle top extrapolation of the moving averages to around mid-February 2025. So really interesting, because it does depend on the acceleration in the cycle. The acceleration in the cycle is currently 210 days. These pi cycle moving averages showcase this acceleration quite well, and it does deviate from the traditional halving cycles quite a lot, because historically after a halving we tend to see 518 days and then a bull market peak. After this halving here, it took a little bit longer by 1 month, 546 days after the halving. So if we were to see a repeat of history, whether it's 518 days or 546 days, that gets us to mid-September or mid-October 2025. So once again, it does go back to that acceleration. How much more will we accelerate in this cycle? Because at the moment we are decelerating as a result of this consolidation range. The longer it consolidates, the less and less we accelerate in this cycle. So the less and less we accelerate in this cycle, if we decelerate to zero, and essentially this 210-day acceleration goes out the window and we completely resynchronize with the traditional halving cycle, then this chart is going to be your golden cheat sheet and guide for a bull market peak. But if we do continue the acceleration and this sideways movement doesn't go on for much longer, and we actually just break out and move in a vertical line from tomorrow, then the acceleration is going to remain there, and maybe it's even going to increase, in which case we'll probably have to focus on this perspective right over here in alignment with this extrapolation of the pi cycle top indicator. The pi cycle top indicator is a valuable and very informative and important indicator, which is why it's important to take it into account and juxtapose it with a potential accelerated cycle thesis, as well as the traditional halving cycle thesis as well for a bull market peak, and see how they diverge. They diverge at the moment by 210 days, but is that going to persist going forward? That's about it for today's video. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.